Hey traders, welcome to another episode of Charts and Coffee. Great to see everybody. Hope everyone is doing well. It's been a good week, I think, overall in terms of some market clarity. So we'll definitely talk about that. We had this conversation Wednesday because that's 1 week out from really what is the beginning of earnings season. What is the beginning of earnings season? Financials. And why does that matter to futures traders? How does that affect us? Because financials are so heavily weighted within the S&P and also within the Dow, but mostly the S&P, the number 2 weighted sector. So keep that in mind. We're coming up into the tail wags the dog season where individual stocks can rock the broader averages. So I'm pretty excited about that because if we're going to see some pullbacks on some of the broader averages, it sure helps to get some earnings season volatility. All right. So as always, love taking these questions. Let's go ahead and grab some questions here. Kicking it off with my friend, Mr. James Harris. Good morning, my friend. When entering a trade using a 1, 2, 3 continuation, short pattern, what would you target for T1? I entered Apple. Okay, let's talk about that. I entered Apple on a 1, 2, 3. Looking for the value area high. So with Apple, yeah, there's your 1, 2, 3 right there. You can see it highlighted on the screen. And, I'm going to move let's do this. Let's move our V score. So I'm going to talk about some volume levels. Let's move our V score to the 8th. Okay. And, we're already, in terms of standard deviations, we're making a run, right? So look for 2 things. Let's not get too cute. I think some of you might say, Rag, how about a fib extension? Perfectly fine. 1.272s are perfectly fine. You look at the last major move and so I do that a little differently. But here's what I would tell you. Here's a really easy way to do it. And you don't even need specific Fibonacci skills, which it absolutely is a skill. And let's look at this here. I'm going to put my drawing tools on the chart, and I would look at that area right in there. That's a gap right in there. You'll notice that we have some volume ledges up in here. Another volume ledge in this area. So look for volume ledges. Look for where the volume is indicating that there's some size weighting to the upside. And then look for the gap close. And then also you can look for previous, right in here, look for swing highs. I mean, you can look at the chart for breadcrumbs. Throw the Darvis levels on there. Let's do this. Throw the Darvis levels on there as well. You got this Darvis level right in here, right there. So let's extend that across. Yeah. So you can see that's where we're at right now. So there's your breakout level. Could that be an optional target? Absolutely. Again, also think about, pulling a Fibonacci retracement from this high to this low, last major move. And what it will do is project the upside fib levels. So clearly you're beyond the 100%. So now we're talking 1.272, 1.618, and that would be another way to go. All right. So thanks for the question. And yes, definitely a nice 1, 2, 3 continuation. Why the continuation? Because the trend that preceded was up, and we don't want to be shorting stocks, equities in an environment where, again, macroeconomically, we're in a phase with a path of least resistance for most stocks are still going to continue to be up, especially if you've got a reflationary narrative as well as the current macroeconomic behavior, the very easy monetary policy that could, let's put it this way. Powell did not derail the markets yesterday, did he? I don't think he did at all. So no Powell on yesterday's noon event. All right, next up is with the Brandons. Good morning. Question: sector, master, futures room, options room, all of the above. I don't know the question. I can't quite follow the question. I am in all the rooms, Brandon, but I only make guest appearances in the options room. I'm only in there every now and then. I'm in the futures room every day, and I'm in the sector secrets mastery room every day. If that is the question, then that is the answer. Next up, hey there, George. What's my take on apps and Diz? Well, I'm always looking at DIS because it's part of the XLC. XLC Communications ETF is the second heaviest weighted sector within the NAS. So as a index trader, as a sector focused trader, DIS is always on the radar. But what about apps here? Digital Turbine? As far as the structure of the market, let's start off with sort of the baseline. Do I want to short it? No. So let's make sure we're very clear on some confidence about the direction that we want to take the trade. So most definitely long. That would be the first thing. But I will also say, looking at previous behavior, I think this is actually a good time to talk about one of the questions you guys asked me yesterday about bigs. We'll talk about that in a moment because it's very similar to what the answer is here going to be for apps. Look at the previous moves. Look at the previous characteristics for the pullback. Is this a really great trend? Negative, Ghost Rider. Is it bullish? Previous trend was. So within the context of this chop, would I expect the market to move higher? Yes. Is the chop going to present more unpredictable retracements? Yes, but the bias is most definitely up, right? Most definitely. Where are we in terms of earnings? Oh gosh, earnings are way out in the stratosphere from here. So I would not prioritize this, certainly from current levels, but I would be long. And this kind of goes back to the question you guys asked me about big, and this was a question also in the Sector Secrets room, and that is, where do you want to get long, big, and how, right? So I said, you don't want to get long up in here. Look at the previous behavior, 34 EMA on the close, 34 EMA on the close, nearly the 34 EMA on the low, 34 EMA on the low. I don't use the 34 for the wave for nothing. I love that 34. And if you guys start looking at that 34, you're going to see how powerful it really is. I'm supplemented with a 21 and a 13, and even keep an eye on the 55, but that 34 is that focal point. And sure enough, do you see how, once again, 34 on the close right here, 34 on the low. Shocking, I know, right? That's what you're waiting for. And here's the thing. What if it didn't get down there this time? No problem. It's not your pitch. We know we can control risk from that level. That zone between the 34 EMA on the close to low, the lower half of my wave, that's the zone. And that's how you build a long, gang. So I hope those of you that were asking about this one in Charts and Coffee yesterday, before the bell rang, said, oh, wait a minute. Rog said the lower half of the wave closed to low, and there it went. By the way, that's not any kind of crystal ball. That's just looking back at the previous characteristics of the pullback. So same thing applies to apps. All right. As far as DIS goes, again, do I want to be long or short? Certainly long. Look at the trend that preceded, and then now look at what we're doing. I would say DIS is getting ready for probably a move to the upside at some point. It's just a continuation. We've got the May 13, so we're just right there inside that 4-week window of the 642 earnings approach that I focus on. What markets are 6 weeks out from earnings that are in uptrends, and in between that 6 and 4 weeks, I want to start building that watch list, start thinking about buying pullbacks, and that sweet spot for the acceleration is usually inside 4 weeks, so 642. What's the 2 stand for? 2 weeks to earnings. You need the setup, the fill, and the follow through in a very small period of time. So it's more like a warning of the proximity to the earnings event. And why is it a warning? Because I want to be flat going into earnings. I don't want to be holding my calls. I don't want to be holding a call vertical going into earnings. I really already wanted to have taken advantage of the move and scale out, pay myself, and then sit through that volatility and see what happens after earnings, pre and post, not through. So this is a nice little lead up, but not the greatest double green. And it's really, of all the markets that I can focus on right now, it's gone sideways. So again, I probably want to be a little bit more patient about the level from which I would buy from. So I can't say I love it. And you can see it's really lethargic. However, the more it plots these very narrow blue grab candles that you can see happening in here, it's like compressed energy. It's squeezing a spring. And I think that if the spring is going to, move in one direction or the other, to me, it's going to be in the upside. Why? Because it's a continuation play. So I like the long here, and this is how you could build it. as we're compressing, think about the volatility that's also narrowing, uh, lowering that cost aspect of getting long a call. This is a nice time to shop calls, and I would absolutely have bullish directional bias. All right, next up is XLE. Okay, so we have a trade in XLE going on right now. And so we have multiple levels. So Ashvin, yeah, so we hit the moderate level yesterday. Now remember, on our entries, we're usually going to have 3 different levels to build it. Aggro, this is the way so this is a question for my sector secrets mastery. So I have an aggro, I have a moderate, and I have a conservative. Aggro is going to be not only the first, but in terms of, relatively speaking, the cost of the trade, it's going to be the highest because it's the one that we're looking for the same strike. That's just the first price that's a trigger. Okay, we know that from each one of these 3 levels, I'm usually going to use anywhere from a 15 to 25% of premium paid stop. We haven't hit that yet, Ashvin. So no, I'm still building that trade. Yeah, I'm still building that trade. All right. So I don't know if the 25%, recalculate what you paid for the option and then ask yourself, are you down 25%? And we aren't. We aren't. And of course, the aggro is going to be the one that's the most expensive to put on. It's the one that some traders will say thanks or no thanks. It's certainly the level from which we put on the smallest position size. So also, for those of you that are not familiar with that kind of trigger methodology, the aggro moderate conservative also gives you insight into your position size. You don't want your aggro levels to be large position sized levels. All right, next up is, do I think Powell had any impact on the market? I don't think he derailed it. So I think he did not do anything to derail the overall uptrend. Are we going to see some weakness here today? Look, I can't blame Powell for this, right? Because we're kind of near these previous swing highs. It's a Friday. So I wouldn't be surprised to see the market pull back a little bit, perhaps. Today, I have a saying, Friday hates traders. Really what it's to remind us is that the psychology of a week ending, a month ending, a quarter ending, a year ending is a very different psychology than the beginning of something. So I think we don't want to be ramping up for entries on Fridays. We want to remember that traders are thinking about, do they want to take a position into the weekend? Do I want to take some profit going into the weekend? And of course, I think we've already put in our pit bull low. A lot of people look at pit bull lows Thursday, Friday. We start our pit bull lows on Wednesday. It's a 3-day window. And I usually look at Wednesday, Thursday for pit bull lows, not Thursday, Friday. And I think we've already put our pit bull lows in. So thanks for the question. What about FITB? Sure. We're taking a look here at, so I like this one. Warshawn, this one is on our watch list for Sector Secrets. And I know that at the moment with tech having its day in the sun, that we're seeing a little bit of unwind from energies and from financials. So you can see that some of the XLF and KRE names are moving lower, but that's fine. That's what we need. Come on down to mama. What do I want? I want this market to move down into the 34 EMA wave. It's just that simple. Come on down. Look at past behavior. Should I expect anything really below 34 EMA high to close? I really should not. So what I'm focusing on here is, and we're going to watch it, this volume legend here, really close to our 34 EMA on the high, and then possibly the 34 EMA on the close. But that could be an interesting zone from which we could get long FITB. And, I want to remind you guys too, because some of you might be thinking, well, Rog, I want to get long calls here. Yes, but keep in mind, a lot of the stocks, most of the stocks that we do in the Sector Secrets Mastery are inexpensive. They make for inexpensive options that are easy to scale into, and they make for inexpensive stocks. And some of our members actually just go ahead and buy the stock. You can play both. You can play the call, or you can play the stock, the underlying. So that's one thing for sure that we do in the mastery, where both are viable and the triggers are exactly the same. So thanks for the question. All right, next up is, let's see here. Thoughts on Snap? Sure, Dean. Thoughts on Snap? It's moving higher. It's moving higher in that way that this could be a 1, 2, 3. I know it's moving higher because the high tide of tech is lifting all boats, right? I can't say that Snap is a trend follow, but Snap is a very, very, very good reminder that, again, when we have a market that is moving higher, all of this. So what was the bias before we went into chop? It was up, right? So when we do go into chop, what is my bias? It's still bullish. That lower end of this box is focused on these two previous Darvas levels right in here. Okay, that's your lower end. That's your extreme low end of the chop that was established in January. Those previous Darvas, pull them forward. We also have, take a look right there. You have a volume ledge right there, another volume ledge right here. So what are you looking for in here? That's your buy zone. And why would I be focusing on an oversold buy zone? Because the market has transitioned to yellow after it was green, which means what? Going yellow after green means that we are focused on the long side and long side only of this market, waiting for a slow stochastic to plummet below 20, waiting for the ready aim fire to move down to the bottom of the range and tell us it's okay to get long, or using these volume ledges, these Darvas levels, previous lows to identify where the oversold lows of the range are. So that's really what that is. Now, there's nothing I can do with this. Is it a buy? It was when it was sitting at the bottom of the range. And then now, am I going to chase this thing higher? No way. No way. Do I like it generally speaking? Yes. I mean, I think it's long or nothing, right? I'm not long short. It's long or nothing. But where are you getting long? What zones are you getting long from? So thanks for the question. Okay, so let's see. What else do we have here? Any thoughts on, sure. Any thoughts on Upwork? Kind of similar. We're going to see this pattern again and again and again. And sometimes we'll have 1, 2, 3 continuations, and sometimes we won't. The previous example in Snap, no 1, 2, 3 continuation, really more an overbought, oversold. In Upwork, we have that same conversation, overbought, oversold, but we also have a 1, 2, 3. So let's dive in. So I have the level here. Take a look at these older Darvas levels. All through here, just extend them forward. That's going to help us identify potential oversold zones of support. What else do we have? All right. Well, let's grab our little tool here. 1, 2, 3. And then now we're waiting for a break. Now notice how the Darvas level is already sitting there, letting us know that that swing high is where that momentum break happened. So this is still inside that 1, 2, 3. And as long as this does not make a lower low than this right here, look, this could be a double bottom. That's fine. This could be an 886 retracement, which I believe it probably is, and then some. That's fine. My request is that, of a 1, 2, 3 is that it makes at least a 50% retracement. But a double bottom 1, 2, 3, perfectly fine. Perfectly fine. The key is we cannot make a lower low. That resets the whole pattern count. So here's your swing high up in here, right? So what are we waiting for? Waiting for a break. But in the meanwhile, what else do we know? So you might notice the oversold chop low zone buy. That's a mouthful. The oversold choppy market, the low part of the zone buy is usually going to accompany the 1, 2, 3. One is buying off the lower lows. The other one is waiting for the market to confirm the momentum and the break of the pattern. But they do coexist. And many times you can take advantage of them simultaneously. No doubt at all. And a lot of these are the kind of setups we talk about in the mastery. So you can check that out at simplertrading.com/ sector. All right, what else do we have here as we wrap up our day? Do I send out alerts in the futures room daily? Almost. I think, Samir, usually if I'm going to send out day trading alerts, it's usually easier if I'm on the mic, but I will send them out if I like them any day of the week. They just have to be for day trades, something that I believe has enough shelf life so that if I send out an alert, you guys have enough time to look at the alert, look at the chart, and set up the trade. To me, anywhere from 5 to 10 minutes would be great. It doesn't always work out that way. But as far as alerts for longer term swing buys, taking advantage of some of the grocery store commodities, as I like to call them, the longer term daily time frame trends like what we're talking about in crude and RBOB. We played corn and soybeans previously, meat, those kinds of things. Yeah, those are discussed every single day in the premium video, which runs anywhere from 10 to 15 minutes and brings you up to speed on the setups that I'm watching that are longer term, right? So thank you for the question. All right. So the question was, this was meant for people in the morning, just to ask which program. Oh, sure. Oh, just trying to find a spot to follow me. Well, and thank you for the question with the Brandons. I would say if you want to be futures trading, come on and join me in the futures room. If you want to follow me with my options trading, things mostly like the kind of conversations we're happening here in ETFs and stocks. Come and join me in Sector Secrets Mastery. So I've compartmentalized, different aspects of my trading life. All my future stuff is going to be in the futures room, right? My day trading, my swing trading, all the futures conversations. Sometimes they overlap because we do have ETFs on many commodities and futures indices. But all my ETF and stock options trading happens in the mastery. So it just depends on what asset class you want to focus on. So that way people know, okay, I'll get futures here. I'll get stock and ETF options trading over here. Again, many of our members buy the underlying stock too. So if you like buying the underlying stock, that's available there on the Sector Secrets side. So thanks for the question. We'll wrap it up over there. I think that ultimately, for those of you that are looking for, where you can land in the simpler family of rooms, if you're looking for diehard options trading, we have an options trading room. We have a Fibonacci trading room. We have numerous masteries by the individual traders here at Simpler. So definitely check out the trials, check out what we have, find the trader and the style that works for you. That's what's so great about what we have here at Simpler. Yes, you can join the general rooms and you'll get a great sampling of a number of us. So I would say check out the room trial, the options room, the futures room, and see what all of our different traders have to offer. You might find ultimately that you want to go into a mastery. You might find that you love the different conversations and the exposure to different ideas in the general rooms, but check them out. I think you'll find a niche. I think you'll find a community that's suiting what it is you want to do and get out of the market. So thanks as always for your time. Enjoy your Friday, enjoy your weekend, and I'll see you on Monday. Same time, same station, gang. Be good to each other.